I'm here in New York City for REIT Week 2019, NAREIT's Investor Conference. Joining me today is John Kessler, President and COO with Empire State Realty Trust. John, thanks so much for joining us.
Matt, thanks for having me again this year. Things are going really well at ESRT. Had another strong quarter in Q1, 300,000 square feet of leasing, 21% leasing spreads on our new Manhattan leases. Did an important renewal with the FDIC, one of our largest tenants, and look forward to a lot of additional top-line growth in the coming year. So things are going well.
And picking up on that, what progress is Empire State making on its long-term strategy to redevelop and release space to larger, higher credit quality tenants, and what impact is that having on rents?
So redevelopment is core to our strategy. We're an internal growth driven business, and we've been steadily redeveloping our portfolio since before the time we went public. We have 10 million square feet in total, 8 million in the city. To date, we've redeveloped 7.4 million, so we've made very substantial progress on that. We've got roughly 600,000 to go, and we expect to do the majority of that redevelopment in the next several years. Importantly, as we've repositioned our buildings and redeveloped our tenant spaces, we've been able to really move our rents. I mentioned the 21% leasing spread in Q1 that we achieved on new leases. And overall, we've achieved roughly 5.5% net effective rent growth over the past year or so, Q1 19 versus a year ago. So we're very pleased with that. And then if we look at the quality and the types of tenants that we're attracting to the business, really continues to get better and better. And we've done leases with, in the past year, tenants like Signature Bank and Uber, who have also each expanded with us since becoming tenants in the portfolio. We have LinkedIn, one of our largest tenants at the Empire State Building, continuing to expand. In the since the first quarter of 19, we announced and welcomed L'Occitane to our portfolio at 111. That just gives you a flavor for the quality of the tenants, which continues to improve.
Now, Empire State recently announced a simplified lease form aimed at expediting lease negotiations. Can you tell us a little bit about how that works and how it fits in with the company's larger plans to reform its lease process?
Sure. So our objective here is essentially to try to make the process of leasing space with us easier. And the tenants have options. They can go to other landlords, other owners. They can take other options for types of space that they occupy. And for us, if we can simplify our lease form and thereby shorten the time it takes and the time and effort and expense to negotiate a lease, that's better for them and it's better for us. And to date, we've worked on simplifying our form, typically these are for our pre-built leases, by the way. Historically been about 50 days on average to negotiate a lease, and we've gotten that down to approximately 40 days today, and we've challenged our team to continue to make it simpler so we can further reduce that time. I'd also comment that I think we're also trying to provide additional services, not just making it easier to do the upfront leases, but also make it easier for them to move into the space, and that can include assistance with finding people to assist with a move of their operations, assistance with technology in their new space, assistance with finding furniture, things like that, and we're continuing to think about other services, all in an effort to provide a better level of service and make it easier for the tenants.
Okay. And finally, New York's new carbon emissions legislation for larger buildings is getting a lot of attention. Are the targets in line with Empire State's own sustainability goals, or do you expect any heavy lifting needed going forward?
So this is very topical given the recent news here in the city, but it's an area that we've been focused on as a company and led by our chairman and CEO, Tony Malkin, for many years, and that is to make our buildings more energy efficient, and because that's good for the shareholders as well as for our tenants. If you look at Empire State Building as an example, it's been a whole building energy retrofit that was completed in 2011. Various measures including recrafting every single of the 6,500 windows in the building to make them more energy efficient, various other initiatives which have resulted in very material improvements in energy efficiency there. And in addition, we partnered with our tenants, people like Coty at the Empire State Building, where we've helped them implement energy efficiency measures in their space. This is what we call our tenant optimization, energy optimization project, and there they've experienced savings through their improvement in the technology in their space of about 30% in terms of energy efficiency. So as we look at the new rules from the city, this is an area that we've been focused on already for quite some time. The 2024 standards, we think we're very well positioned. We don't expect to have to make any additional investment to meet those requirements. And as it relates to the 2030 requirements there, we're still waiting for some of the details in the rules to be finalized, and I think we're not prepared yet to summarize where we stand, but it's clearly an area that we've been focusing on for a long time, and we feel well positioned.
Great. John, thank you so much for joining us.
Thank you, Matt.
For more from REIT Week 2019, be sure to visit NAREIT's website, REIT.com.